Pakistan's Finance Minister Muhammad Aurangzeb has given the clearest signal yet that the country's policy interest rate could be cut later this year, a move that could inject fresh life into a slowing economy. Speaking at the 78th Independence Day celebrations and the Marka-e-Haque event at the Rawalpindi Chamber of Commerce and Industry, Aurangzeb linked the optimism to slowing inflation, improving economic indicators, and a positive global perception of Pakistan's reforms. Pakistan's policy rate currently stands at 11%, a level that many businesses say is choking growth. Just last month, the State Bank of Pakistan's Monetary Policy Committee surprised markets by holding the rate steady despite calls for a cut of up to 100 basis points. Inflation in June 2025 dropped to 3.2% year-on-year, driven largely by falling food prices. Core inflation also dipped, giving analysts room to speculate about an interest rate reduction later this year. I am always careful to note that the policy rate and the exchange rate remain under the purview of the State Bank and the Monetary Policy Committee, said Aurangzeb. But based on core and average inflation, I personally think there's room to do more. I am very hopeful that during this calendar year, we will see movement on the policy rate going south. International credit agencies have started taking notice. S&P and Fitch have already upgraded us, and I'm very hopeful Moody's will follow, Aurangzeb noted. These upgrades follow a series of fiscal and structural reforms designed to stabilize the economy, control deficits, and improve investor confidence. One of the most significant developments is the U.S.-Pakistan trade deal, which reduces reciprocal tariffs from 29% to 19%, the lowest in the region. This move is expected to give Pakistani exporters a competitive advantage in the U.S. market, potentially boosting export revenues. Aurangzeb outlined key achievements. Economic size and national income have grown. Financial sector stability has improved. Fiscal deficit has been reduced to record lows. Inflation has come down sharply. The current account is in surplus. Remittances are at historic highs. Debt servicing costs were cut by 1 trillion rupees last year, with a target to repeat the same savings this fiscal year. Tax reform is underway in the Federal Board of Revenue (FBR) to create a fairer, more competitive system. Aurangzeb stressed that the salaried class and manufacturing sector cannot be further burdened, a nod to public sentiment. Lower interest rates could reduce the cost of borrowing for businesses, stimulate investment, and potentially lower unemployment. But there are risks. Cutting rates too early could reignite inflation, especially if global oil prices rise or the rupee comes under pressure. Economists say the real test will be in balancing monetary policy with fiscal discipline. Pakistan's macroeconomic fundamentals are improving, but premature easing could undo progress, warns economist Dr. Farooq Hazan.